The UK housing market has been in a perpetual state of crisis for at least a decade in terms of lack of affordable housing that just tends to get worse with each passing year. Therefore, most market commentators tend to focus on the various measures of housing market affordability, or rather unaffordability, as house prices, despite the crash of 2008 to 2009, never fell to anywhere near the affordability levels of the early 1990s housing bear market lows. And therefore, ivory tower academics have continued to cling on to expectations that a further house prices crash must be inevitable so as to fit in with their theoretical models of where house prices should fall to in terms of affordability that gets liberally regurgitated in the mainstream press. And looking at the graph, it really is very easy to be seduced by something that on first glance appears obvious, that house prices really did have a long way to fall to reach the affordability levels of the past. What the academics and the mainstream press commentators fail to comprehend is trend, or more precisely, the trend in affordability. The trend over the past 40 years has been for the proportion of household earnings spent on housing costs to rise from 20% 40 years ago to an average of 35% for December 2013 analysis, which is trending towards 50% by 2030. This is the big story that academics have missed, as over time, decades in fact, people are becoming conditioned to spend more and more of their earnings on housing costs as being the norm. The updated affordability graph as of September 2015 shows the underlying relentless trend of affordability being once more ratcheted higher that looks set to breach the 2007 peak in just over a year's time. The bottom line is that house prices are going to get ever more expensive, where those who are waiting for a crash to more affordable levels will continue to regret not buying, as the only way that housing can even start to become more affordable is if the UK literally triples the number of new builds each year from approximately 140,000 per annum to 400,000. Something that is just not going to happen, as it would literally mean the government undertaking to build a new major city every year. Instead, it has been over 40 years since the last town, let alone city, was built. In my opinion, I think it is inevitable that eventually the government will be forced to build a series of new towns that will grow into major new cities that should be announced over the coming years, which, whilst encouraging economic growth, will however also encourage further mass migration. So even a series of new towns and cities may only make a marginal short-term difference to UK housing market affordability ratios. The non-seasonally adjusted UK house prices momentum shows that after a post-election slowdown to 7%, momentum has once more increased to an inflation rate of 10%. Therefore, the effective house prices momentum range is between 11% and 7%, which implies an average annual house price inflation rate of about 9%. It is now 23 months since excerpted analysis and the concluding 5-year trend forecast from the then forthcoming UK housing market ebook was published, as the following illustrates.
Therefore, in conclusion, my UK house prices forecast is for the Halifax non-seasonally adjusted house prices index to target a trend to an average price of £270,600 by the end of 2018, which represents a 55% price rise on the most recent Halifax prices data of £174,671 for November. Again note that this analysis in this video is merely an excerpt from the total analysis in arriving at this trend forecast. So do refer to my UK housing market ebook, which will be available for free download from the middle of January 2014.
In terms of the current state of the UK housing bull market, the Halifax average house prices data for October 2015 of £204,000 is currently showing a 4.5% deviation against the forecast trend trajectory, which, if it continues to persist for the term of the 5-year forecast for a 55% rise in average UK house prices, that would translate into an 11% reduction in the forecast outcome to approximately 44% rise by the end of 2018. The bottom line is that the megatrend drivers of out-of-control immigration, lack of house building, flood of foreign capital, and the UK government's perpetual inflation of the debt bubble ensures that the UK housing bull market will continue despite any hit such as that which the buy-to-let sector is currently taking. So don't be fooled by the perma-housing price crash bear fools that populate the mainstream press and blogosphere, who see every slowdown or a dip as a sign of the end based on fairy tale logic. Subscribe to this YouTube channel for ongoing analysis and detailed trend forecasts.